One might ask how this nation fell from first in the world to 12th in producing college graduates. We did it one honorary student loan at a time. Martin O'Malley. Sadly, the current post-secondary education system is critically flawed. Tuition at American colleges and universities is rising at unprecedented rates. Student debt has skyrocketed, and the graduation rate is declining. Immediate change is necessary to keep alive the American dream of meaningful higher education. Therefore, the affirmative team stands resolved. The United States federal government should reform its policy or policies for student financial aid for post-secondary education. Observation 1, definitions. Reform, make changes in something, typically a social, political, or economic institution or practice, in order to improve it. From New American Oxford Dictionary. Policy is a course or principle of action adopted or proposed by a government, party, business, or individual. From New American Oxford Dictionary. Student financial aid is defined as money to help pay for post-secondary education. From the Office of Federal Student Aid Branch of the U.S. Department of Education. Federal loans is defined as borrowed money for college or career school. You must repay your loans with interest. From the Office of Federal Student Aid Branch of the U.S. Department of Education. Post-secondary education is defined as of or relating to education taking place following graduation from a high school. Defined by Webster's New World College Dictionary, 5th edition. Observation 2, harms. Harm 1, federal student loans create artificially higher demand for post-secondary education and thus contributes to increasing tuition rates. Andrew Kelly, who has a PhD in political science from Berkeley, wrote in his article, "Does federal student aid cause tuition increases? It certainly enables them." On October 8, 2015, quote, "An earlier study by Stephanie Cellini and Claudia Golden compared for-profit colleges that had access to federal aid programs to those that did not, and found that prices were 75% higher among the former," end quote. Neil McCluskey, who has a PhD in public policy from George Mason University, wrote in an article discussing the effect federal loans have on tuition. Reducing federal aid, not changing bankruptcy laws, key to college affordability. Published on March 20th, 2012. Quote, "The logic behind seeing federal aid as a primary cause of inflation is straightforward. First, subsidies drive increased demand, which increases prices. Second, and more important, colleges raise their prices if they know students will be able to pay them, and federal aid ensures they can," end quote. Harm 2, federal student loans result in crushing student debt. Annie Lowley wrote in his article, "Student debt slows growth as young spend less," published by the New York Times on May 10th, 2013. Quote, "Student loan debt, which recently exceeded $1 trillion in total, is making it even harder for many of them, delaying purchases of things like homes, cars, and other big-ticket items, and acting as a drag on growth," economists said. Consider Shane Gill, a 33-year-old high school teacher in New York City. He does not have a car, he does not own a home, he is not married, and he is no anomaly. Like hundreds of thousands of others in his generation, he has put off such major purchases or decisions in part because of his debts. Mr. Gill owes about $45,000 in federal student loans, plus another $40,000 to his parents. It has left him with tremendous financial constraints as he faces chipping away at the debt for years on end, end quote. Observation 3, plan. Mandate. We will pass a law to phase out all federal student loans over a 12-year period, and all laws or parts of laws in conflict are hereby repealed. The affirmative team reserves the right to expand on this plan as necessary. Agency, the President of the United States, the Executive Branch, the U.S. Congress, and the Department of Education. Enforcement, the Executive Branch. Funding and staffing, the nominal costs associated with enacting this plan will be paid by normal means. Observation 4, advantages. Advantage 1, The cost of higher education will no longer be influenced by the artificial demand created by federal student loans. Samuel Bryan wrote in his article, "Peter Schiff was right. Federal aid inflates college tuition," quoting Peter Schiff, who is an economist, financial broker/dealer, author, and a frequent guest on national news, published September 16, 2015. Quote, "Just like the government inflated the housing bubble, the reason tuitions are so high is because government guarantees the loans. Now, students take these guarantees and bid tuitions through the roof. Take the government out of the equation, and the colleges and universities have to lower tuitions so students can afford to go." End quote. Advantage 2. By eradicating the federal student loan program, students entering college will no longer suffer crushing debt. Daniel Oliver, chairman of the Board of Education and Research Institute and senior director of White House Writers Group in Washington, D.C., wrote in his article, "Forget college for everyone. Forgive student loans and end further subsidies," published by The Federalist on January 20th, 2015, quote, "Students for whom college makes sense would still be able to get loans from friends, banks, perhaps companies, and the colleges themselves, as long as they could persuade the lender, e.g. by having decent SAT scores, that they could truly profit from the college," end quote. With tuition brought back to a reasonable price, the amount of debt, if any is accrued, will be manageable. In conclusion, by making college unaffordable and student loans unbearable, we risk deterring our best and brightest from pursuing higher education and securing a good-paying job. This quote was by Mark Pocan, a U.S. representative. Student debt is crippling. Action must be taken in order to remedy this problem and create a system that allows students to graduate without crushing debt. Our plan will end the cruel repercussions of a failed policy. Thank you, and I now stand open for cross-examination and further clarification.
Did you have a definition for student financial aid?
Yes, it's money to help pay for post-secondary education.
And is that like student financial aid as one word or separate words?
Separate words.
Okay. Moving on. Actually, let's do these aid. Is this going to the students? Are these loans going to the students?
Correct.
And under this definition of aid, it's the loans that go specifically to the students, correct?
Yes.
Okay. So moving on, you brought up a piece of evidence talking about statistics about colleges that have 75% higher tuition. What kind of colleges are being looked at here?
The study talks about for-profit colleges.
Okay, and are they four-year colleges? Are they private colleges? What kind of pool of colleges are we looking at here?
I'm not aware. I can look at our evidence and try to clarify that for you.
But we're not sure if it's a wide variety or a very specific set of colleges who are raising tuition because of loans.
Well, it talks about for-profit colleges that have access to federal aid programs.
Okay.
So that's a lot of colleges.
Okay, now what was the source for the second piece of evidence under your first harm?
Neil McCluskey.
What publication?
I don't believe it's on here.
Okay, so is it from a credible place? Is it written in a blog, or is it from the Brookings Institute? Are we not aware of where this is coming from?
My partner will bring that up in her next speech. Yeah.
Okay, what is the average amount that each student has in student debt?
Right now, the average amount of a student coming out of a four-year college program is $28,000.
Okay. Now, you said a lot that student aid or student debt is crushing. Who said that it was crushing?
Well, according to the piece of evidence, $45,000 in federal student loans, I would consider that crushing.
So this is the affirmative team's opinion and not the opinion of the experts who are looking at the situation?
I would also say that $28,000 is crushing, and I think most people would agree with that.
So again, it's the affirmative team's opinion.
We can bring up evidence to support that.
Okay. Now, are students who are getting these loans unable to graduate because of their debt?
I don't have specific statistics with me right now.
So then we can say for the most part that this loan program is serving its purpose in allowing students to get degrees.
Actually, the graduation rate at most colleges, the average graduation rate around the country is 33%.
But I'm talking about specifically those who receive government loans.
I do not have that piece of evidence with me.
Okay, thank you. I have no more time.
55 to 65 cents of every dollar received via a Pell Grant or subsidized loan is swallowed up by increased tuition. Specifically, this comes from the National Review on July 13th of 2015 by Ian Tuttle. However, what this evidence directly states is that it's both Pell Grants and loans that increase tuition. Now, this is very important when it comes to the affirmative team's case and the inherency of their case. We will see this further under the harms, and we'll explain this more under the harms. However, I'd first like to address the issue of topicality. The affirmative team, under their mandate, is eliminating all loans. However, all loans also includes those loans like PLUS loans, which go to parents and families. And a counter definition for federal aid, which is very important, or financial aid rather, which is very important in this instance, is from the Integrated Post-Secondary Education Data System Glossary. The definition is federal financial aid is federal work study, grants, loans to students, assistantships, scholarships, fellowships, tuition waivers, et cetera, et cetera. It goes down to say, however, and other monies other than from relatives and friends. This means that if the affirmative team is eliminating all loans, including those that go to parents and families, and in turn perhaps go to students, they are outstepping the bounds of the resolution. So this means that by stepping outside of the bounds of the resolution, the affirmative team is essentially eliminating far more than they should be, and thus it eliminates some of the resolutional intent, and therefore perhaps puts the negative team at a slight disadvantage. So with topicality out of the way, now let us take a look at further on down the case, first starting with the benefits of the status quo. Our benefit of the status quo first is that subsidized loans actually help students pay for college. What subsidized loans do is the government subsidizes the interest rate so that students won't have to pay so much over time. In addition to this, there is a grace period that students get while in college, around 6 months, so that they can plan in order to pay for these loans. This is something that would go away under the affirmative team's case. So with this benefit of the status quo out of the way, now let us take a look at the harms. And under the harms, there is a very, very large inherency issue. First, the first harm is that the negative team has claimed that loans essentially increase tuition, that it increases prices and it harms students. However, I have read this piece of evidence from the National Review stating that it's not just loans, it's Pell Grants. Now, this is very important because the affirmative team's case is essentially a needs analysis case, or a plan meets needs. Under the policy debate glossary, the definition of a needs analysis affirmative is an affirmative case wherein a significant inherent need or harm in the status quo exists that can be best solved by adopting the affirmative team's plan. This plan will solve the need and provide significant advantages. However, is the affirmative team truly solving for the harms at hand? Under this specific harm, the affirmative team is claiming that tuition is rising because of loans. However, it's not just because of loans, it's because of Pell Grants that tuition is rising. So essentially what will happen is the affirmative team will eliminate one program just in order for tuition to continue rising and for students to be at a disadvantage. So this is the first argument under the first harm. Now we have the second harm. The affirmative team has claimed that student loans lead to great debt amongst students. However, this debt will continue even after the affirmative team's case is implemented. As the affirmative team indeed said further down under the advantages, these students could get loans from banks, from their family members, and from other places. Essentially what this means is that students will still have debt, only from different areas, perhaps even with higher interest rates, which harm them further. So are they truly solving for this debt crisis? Again, this goes back to the inherency point. They are not completely solving for this harm. So with the harms out of the way, we have seen how the affirmative team's case they say that they are going to solve these harms. However, we have seen that there are alternate causes that are causing these things to continue. In addition to that, there are other means that students will be able to gain debt and still be at a disadvantage in the future. So next we come under the mandate, and the mandate is that phase out all student loans or all loans. And this kind of goes back into our topicality argument, stating that if they eliminate all loans, that includes things like plus loans that go to parents and families. So this is a very, very big issue for the affirmative team. Now we come into the advantages, and the advantages tie directly in essentially with the harm arguments. The first advantage is that the affirmative team has stated that essentially tuition will no longer be influenced. However, we have stated that tuition is influenced by more than just loans, and I cannot stress this enough because this is the base of the affirmative team's case. Loans are not the only cause of tuition increase. This means that this advantage will not be it won't fully come under the affirmative team's case. In no significant way will it come. So this is the argument under the advantage, and this directly ties into the first harm argument, first inherency argument. And the second advantage is that students won't suffer from student loan debt. However, this also goes back into our second harm argument, that this debt will just come from different sources, oftentimes in higher interest rates, causing students to pay more over time, and this could very well lead to increased default rates, for example, or in general, just worse financial situations for these students. So this is the affirmative team's case out of the way. We have seen how the affirmative team is not inherent whatsoever, and we have also seen how the affirmative team is not truly solving in order to get those advantages that they claim. Now we come to the disadvantage, and this ties into our benefit of the status quo. A lot of loans help students, especially subsidized loans. Those loans help students grace periods in order for those students to be able to pay off their loans better in the long run. So perhaps those student loans may be high, but those subsidized loans help those students be able to pay them off better over time. So throughout this speech, we have seen first how the affirmative team's case is not topical. We have also seen how the harms are or they're not inherent whatsoever. We have also seen that the advantages will not be solved for, and we've finally seen how the disadvantage will cause a significant disadvantage to students in the long run. Thank you, and I now stand open for cross-examination and clarification.
Good evening.
Good evening.
Okay, so you were saying that okay, let me just start with a question. Why are there parent loans?
Parent loans exist so that if parents help, for example, students pay for college, the government gives them loans in order to essentially subsidize their costs.
But you said it's to help students, right?
Yes, but it's not directly a student loan. It does not go directly to the students. This is why topicality is an issue under your case.
But it's to help the students get through college.
Perhaps it does help the students get through college, but it goes directly to the parents. Therefore, under the definition of student or financial aid, rather, it does not come underneath this definition. Therefore, that is exactly what makes the affirmative team's case untopical.
Okay. What percentage of students receive Pell Grants?
I don't know the exact statistics of the students who receive Pell Grants. It's primarily low-income students. I do know the budget of the Pell Grant program, but I don't know exactly how that equates to the number of students.
Okay. So would you agree that aid causes tuition to rise?
All aid causes tuition to rise, yes.
Okay, thank you. Do you know what percentage of students receive subsidized loans?
Again, it goes primarily to low-income students who absolutely need the financial assistance. Those students, however, I don't have the specific statistic.
So a lot of middle-class families are not able to receive Pell Grants or subsidized loans, correct?
No, not generally.
Okay. So would you agree that there's a difference between debt and crushing debt?
I do believe that in some cases, all debt can be crushing, depending on the debt.
Okay. Do you know what the federal interest rate is?
The federal interest rate, right at this moment, I do believe is 4.3% thereabouts.
Okay, and do you know what the lowest private interest rate is right now, the fixed private interest rate?
It's about that. Interest rates are currently low, but they are rising as the Federal Reserve starts to reform things.
Okay. So if a student is suffering crushing debt, is a loan helping them
A loan
get
certainly,
through college?
Yes, it certainly does. Otherwise, if they couldn't pay for college, they wouldn't be going to college and impacting the economy in the long run. So these loans certainly do help students be able to go to college and impact the economy.
Do you think that after they graduate from college, or even if they don't graduate, do you think that if they're suffering crushing debt, do you think they're thankful they took out those loans?
If they get a high-paying job, I would think so, yes. I certainly would be.
Okay, thank you.
The only solution is to get the government out of the business of subsidizing student debt. Then at least decisions of students to borrow and banks to lend and colleges to set tuition will be based on economic reality rather than the shifting sand of monetary inflation. This is from Sean Rittenhorn in his article, Get Government Out of the Student Debt Business, published May 16, 2013, end quote. And this is what the affirmative team wants to do. We want to get the government's inflationary effects out of the system so that colleges will base their tuition on real economic issues and not just the amount of money flowing into the system from the government. Now, let's first address this issue of topicality that has been raised by the negative team. And basically their argument was that because we're limiting all grants, and that includes parent grants, loans, not grants, then we're not topical. But in fact, under the definition that we presented, we are topical. I'd like to remind you what that definition was. It says student financial aid, money to help pay for post-secondary education. This is from the U.S. Department of Education. This is how our government defines student financial aid. And our plan falls under this topic. And I'd also like to point out that explain to you what Parent Plus loans really do. And the idea is that instead of the students taking out the loan, the parents take out the loan, but the money goes directly to pay for the student's college. This is for the students. It goes directly to them. We are clearly within the bounds of the resolution because of our definition of student financial aid. This is student financial aid as defined by our government and the Department of Education, which makes policies in this area. So clearly we are topical. We do not want to become with an unfair advantage. We want this to be a good debate round. So we have brought a case that is under the topic. So now let's move on to the benefit of their status quo, and I'll address also the disadvantage because it was the flip side of the benefit of the status quo. Now they said the benefit of the status quo was that with subsidized loans, students could have a deferment period and wouldn't have to pay their interest on their loans while they were in school. And that their disadvantage was, well, they will no longer be able to do this after our plan. But this is actually not true. I have here a quote from Discover, who does loans to students. And they write, it was from their website, that the deferment period is 45 months while you're in school and then 6 months after. I'll point out that 45 months is almost 4 years. That's 2 months short of 4 years, and then you have a 6-month grace period. So under our plan, students who have to take out loans, if they do, will have this deferment and will have this benefit still available to them under the private sector. So this is really not a disadvantage at all. Now let's move on to our harm, and let me reiterate to you what our harm really is. It is that the government, by giving all this money, by throwing all this money at the problem, has inflated the system. It's not based on economic reality anymore. This is basic economic theory, the laws of supply and demand. When you have a huge demand, all this money, anyone can go, everyone can go, then prices will go up. But the other thing is, under this system, colleges know students will be able to pay whatever price they set because they can always go back to the government for more loans. They have unlimited amount of loans they can take out while in college. So this is a really big problem that we will be fixing. Now, the negative team's argument was that this is not an inherent harm because Pell Grants also contribute to the rise in college tuition. But our harm is inherent because our harm was, I will remind you, federal student loans create artificially higher demand for post-secondary education and thus contribute to the increasing tuition rates. Federal student loans are the biggest influence on colleges setting their tuition rates. This is definitely an inherent harm, and the negative team admitted that loans do cause tuition to go up. So this is a harm that is within the system. I'll remind you what the definition of inherency is that can the problem be fixed by the status quo, and is it being fixed by the status quo? This problem is not being addressed by the status quo, and it will not be addressed unless we enact our plan. So this is definitely an inherent harm. Now let's look back down to harm 2, and their argument was again that, they'll still be getting debt. But as you've pointed out, without the inflationary effects of federal loans, the rate of tuition, which is our advantage, will go down. Now, when the cost of college goes down, and it's also more difficult to get loans because it is more difficult to get loans in the private sector, then the amount of debt that is going to be taken on is not going to be crushing. It's going to be less. Under the status quo, it is crushing. I'd like to read you a quote describing this from Mark Cantuis. It was published on finaid.com. He's an author of Secrets to Winning a Scholarship, and his article 5 Myths About Student Loans, published November 2011. He says, quote, "Students who graduate with high debt must often abandon certain career aspirations. I've spoken to hundreds of borrowers who are behind in their student loans, and they tell me they have delayed major life events, such as buying a car or home, or getting married, having children, or saving for their children's college education, or for retirement. According to a recent survey, about a third of recent college graduates have to move back in with their parents to save on living expenses. The status quo is crushing our students with massive debt. That is a fact. $28,000 in debt is crushing. And from this evidence, we can clearly see that this is a big problem. Now, let's move down to the mandate, which was basically that we're not topical, so clearly this mandate isn't necessary. It can't even be brought forth. But I've already addressed the issue of topicality. We are topical. Our mandate will solve the problems because by removing federal loans, we will be removing the cause of this, the major cause of this inflation, and removing this inflationary effects and making college cheaper for students. Now, let's move on to advantage, was that it will still be influenced, again, with the inherency argument, basically the same as harm 1. But yes, it will still be influenced by Pell Grants. But as my partner pointed out in cross-examination, Pell Grants do not go to all students. It is only students who have an income of less than $20,000. And that's not the majority of students attending college. The major influencer here is loans, not Pell Grants. And by removing the loans, we will be fixing the problem of this inflationary effect and the tremendous rise in college prices. Now let's look at advantage 2, which is that students won't be suffering under crushing debt under our plan. The negative team says, well, they'll just replace the debt they have with the federal government with debt from other sources. But as I pointed out, it's much more difficult to get to get loans from the private sector. So students will not be taking out as many loans. And without this unlimited source of money that the federal government is throwing at the system, the cost of tuition will have to come down, as we read within our 1AC, and as we will continue to present to you throughout the round. Now, I'd like to read you a quote here stating this from Samuel Bryan, and it was published September 16th, 2015, and he says, quote, not only the cost, but the 5 or 6 years that you are in the labor force. If we simply got the government out of education, college tuitions would plunge. College prices will go down, it's more difficult to get loans, people will have less debt. Thank you, and I now stand open for cross-examination and further clarification.
Good evening.
Good evening.
Under the benefit of the status quo, what was your main argument about subsidized loans?
Well, that we won't be losing this benefit because if you do take out a private loan, that is still available to them. So you have a deferment period.
Did you read any evidence stating that the private sector has this in each one of their loans?
I read that it is available in the private sector, in particular from the Discover, which does a lot of lending to students.
And where was that piece of evidence from?
Discover.com, they published it.
Okay, and what are the credentials of Discover.com?
They're a very large bank. I believe they come self-credentialed.
Okay.
They're from their history.
And are there other banks that exist in not just Discover?
Yes.
Yes, and do those other banks also have this same grace period as Discover Bank?
I'm not sure specifically, but my point was that it is still available in the private sector.
Okay, and can we assume that because one bank has it, all banks have it?
I would not assume that.
Okay. Under the second harm, did you essentially state that what is your main argument under the second harm?
That this is a major problem in the status quo, that Pell Grants do not have the major influence because not all students can get them, and that loans are the big inflationary cause, and it is an inherent problem because the status quo is not fixing that.
And did you bring up any statistics on how many people receive loans versus how many people receive Pell Grants?
I did not.
Do you know the budget for subsidized loans and government loans?
I do not.
Okay. So why then can we assume that the Pell Grant program is far smaller than a subsidized loan program?
Because it's only available to a limited amount of people. You have to have an income of less than $20,000 to qualify for a Pell Grant.
Okay. After the affirmative team's case is passed, will students still have debt after college?
It depends on the student and the situation.
Okay. For perhaps low-income students who could perhaps be getting subsidized loans, will those students have to take out loans from private sector banks?
Some of them will, but a lot of them, if they're qualified, will be able to get scholarships and other aid.
Okay, let's say they do get loans from those banks. Will they have to pay back those loans?
Definitely.
So if they have to pay back those loans, that loan is considered debt to that student?
Yes.
So students will still have debt under your plan, is this correct?
Potentially, yes. Some of them will.
And thank you. No further questions.
Yep.
Among the pool of borrowers currently in repayment, those with greater debt burdens are not experiencing greater hardship. This comes from Is a Student Loan Crisis on the Horizon? June 2014, Beth Ackers and Matthew M. Chinkos from the Brookings Institute. This piece of evidence we will address a little bit later under the disadvantage, but what it's saying is that student debt is not actually as big of a problem as what the affirmative team is telling you it is. Before we get further into the case, let's talk about topicality. Now, our argument under topicality is essentially that they are doing more than just redefining loans to students. Our definition that we brought up talks about how this excludes loans to parents. Now let's compare our definitions. Their definition, yes, it was from the Department of Education. However, our definition is far more specific than theirs. I believe their definition only talked about money that helps students pay for college. Under the affirmative team's definition, things that would be included in student financial aid could simply just be parents giving their students money to pay for college. It never said any type of thing about the kinds of loans that are provided within the system like our definition does. And so our definition is far more specific, which is why it should be upheld to a higher standard. Now, the affirmative team is refining some loans, which will be certain loans that are to students. So they are to some extent within the resolution. However, when thinking about boundaries, think about sports. In sports, if you even have one toe over the line out of bounds, you are considered out of bounds. And the same goes with topicality. While there's half of their case might still be kind of a little bit topical because it deals with certain kinds of loans, the rest of the case that deals with plus loans, which are specifically loans to parents, is out of bounds, and therefore they should be considered untopical in this round. So with that addressed, let's move on to look at our benefit of the status quo. Our benefit of the status quo is essentially that subsidized loans provide a nice grace period for students, and this is something that we're going to be losing under the affirmative team's plan. They brought up a piece of evidence that my partner questioned in cross-examination, talking about how this one specific bank provides a grace period. And that's good to know, but that doesn't necessarily mean that it's all the banks, that it's every single plan that provides this grace period. But what we do know is that with all of the federal loans, they are providing this grace period. With all of the subsidized loans, we get this grace period. So it's far more likely for our benefit of the status quo to exist in the status quo and not under the affirmative team's plan. Moving on to look at their harms. We are essentially arguing alternate causality under the harms, meaning that the reason that this tuition is higher is coming from a different source. It's not only what the affirmative team is claiming. My partner read a piece of evidence from the National Review that says 55 to 65 cents of every dollar received via Pell Grant or subsidized loan is swallowed up by increased tuition. Now, it is true that they are talking about loans and their harm. However, what we need to see is that loans and Pell Grants together at the same rate are what are driving up college tuition. It's not just the subsidized loans. So if the affirmative team is only getting rid of subsidized loans, then it's not going to solve the problem, because Pell Grants and subsidized loans go hand in hand in this harm. And Pell Grants are not what the affirmative team is going to be solving for. And therefore, they are not going to be solving their harm. Moving on to harm 2. Our argument under harm 2 is essentially that loans are going to happen, or that debt burden is going to happen regardless of the kind of loan that is taken out. Students can still remain in debt even if they take out a private loan. The main argument of the affirmative team under this was, well, is that a crushing loan or is it not a crushing loan? I would like to point out that the word crushing, as addressed in the first cross-examination, is an adjective that the affirmative team comes up with on their own. None of their evidence calls these student loans crushing, and none of their evidence compares the crushing loans of the government as opposed to the non-crushing loans of the private sector. So really, this comparison here is something that the affirmative team is making entirely on their own and is not supported with evidence. The fact is that students can still be in debt regardless whether it's from the government or whether it's from the private sector. This debt will still exist, and again, it is an alternate causality problem. And again, I would like to state that they never brought up any evidence to support that private loans are harder to get than what government loans are. This was another one of their main arguments under here, that this debt is going to go down because private loans are harder to get. But they never brought up any evidence to support this fact. It was all their own words. Again, we need evidence stating specifically that private loans are harder to get and it will decrease the amount of debt because they are harder to get. They have not made that link yet. Moving on to their mandate. Our argument under the mandate is essentially topicality, that their mandate is addressing more than just loans to students. The resolution calls for us to talk about student financial aid and not aid that is given out to parents like PLUS loans are. Moving on to the advantage. Their first advantage is essentially the reverse of their first harm. And again, what they said under this advantage was that Pell Grants don't go to all students. However, the piece of evidence that we brought up talking about the increase of 55 to 65% of every dollar, it doesn't matter how many students get Pell. Pell Grants and subsidized loans are increasing at the exact same amount regardless who gets it, whether it's the majority or not. And moving on to advantage 2, again, there's no evidence stating that the costs will go down simply because these private loans are more difficult to get. So let's talk about the disadvantage. Our disadvantage is essentially the reverse of the benefit of the status quo. If we take away the affirmative team's plan, students will not have as much grace in repaying their student loans. So it's going to make things more difficult for them and not easier. The piece of evidence that I brought up from the Brookings Foundation, Brookings Institute, is actually talking about how students who currently experience debt are not actually at that much of a financial hardship. It's not actually that big of a deal. But what is a big of a deal is if students are not able to repay this debt easily, if students are not able to actually have this grace period on their loan, that is our disadvantage. So it's not so much of a big deal whether you have debt or not. What the big deal is when you're actually allowed to be repaying it. When you are allowed, how much of a grace period you get between the time that you graduate college and get a job. This grace period is important in order for them to build a foundation of some income and some earnings before they have to repay their loans. And again, there's no evidence brought up by the affirmative team to state that every single private loan, just like every single government loan, actually has this grace period in it. So to recap, we have looked at the stock issue of topicality and seen why the affirmative team is not topical, and we've also looked at alternate causality and a disadvantage that will come about as a result of the affirmative team's plan. Thank you, and I now stand open for cross-examination.
Is my timer on there?
I don't think so, but you can use mine. Do you want to use mine?
Sweet, I think I lost it.
Oh no. I'm sure you could yell out to the audience. Someone probably has one.
Good point.
There you go.
Thanks. Good evening.
Good evening.
Could you read your definition that you presented as a counter definition, please?
Yes, let me find it. Federal work study, grants, loans to student, assistantships, scholarships, and fellowships, tuition waivers, tuition discounts, employer aid, and other monies. This excludes loans to parents.
Is that a direct quote
This is from
the last sentence? Because I believe when you read it before, it said it excludes money from relatives.
Oh yeah, it also says that, but it also says excludes loans to parents. It says other than from relatives/friends,
And
but
what is-
excludes loans to parents.
Thanks. What is the source of that definition?
The source of that definition, I believe, is from the Integrated Post-Secondary Education Data System Glossary.
So it's not from the U.S. Department of Education that sets policy in this area?
It is not, however, it is more specific as we have examined.
Thank you. So is this money going, it comes from the government, correct?
What money?
The Parent Plus loans that you're saying
It
are on
does.
top of it. And it goes directly to the students, is that right?
No, it does not. It goes to the parents.
Do you have evidence that it goes to the parents and not to the students' tuition?
I didn't read any. We might be able to find some, but that is actually the concept of the PLUS loan, is that the parents take on the burden and not the students.
Okay, thank you very much. Now, but it's still going to pay for the students' tuition, correct?
It is. However, just because something's
Thank you.
paying for student tuition doesn't mean it's government financial aid for students.
Thank you very much. Okay, and is the problem that we've presented of our harm the inflation caused by loans? Would you agree with that?
It is caused by loans hand in hand with Pell Grants.
But would you agree that the problem presented by the affirmative team is the inflationary effects of loans?
And Pell Grants.
The harm stated by the affirmative team is directly affecting the inflationary effect of loans. Would you agree with that?
I would agree.
Is-
It's also Pell Grants.
Thank you. And did the negative team bring up any evidence that the debt will still exist? Students will still get into debt under our plan without federal government?
We did not. However, if students still need money to pay for college, they're still going to have to get it
Thank
somewhere.
you. Thank you very much. And you said that students can repay easily under the status quo. Is that true?
I actually misspoke, and what I meant to say was that they have a grace period, so not necessarily that the payments are easy,
So it's
but
still
that it gives them
difficult to
grace.
pay off their loans?
It varies from student to student. It really does.
Okay. Thank you. And would you agree that private loans are based on credit? Loans that come from the private sector are based on your credit score?
I'm not entirely completely educated on the type of loans in the private sector, but some of them most likely are.
Thank you. So, assuming that they are, then it would be more difficult if you had a lower credit score to get a loan. Would you agree with that?
It depends.
Okay. Thank you very much. No further questions.
All right, thank you.
What we have seen throughout the constructives thus far is we have seen how the affirmative team claims that they will be greatly improving the situation, and that, in essence, that their plan will be meeting the needs. However, if we take a closer look at truly what the affirmative team's case is trying to do, we will find that there is an alternate cause for the problems. And this is where a lot of our arguments stem from, and something that the affirmative team has not directly argued, neither with evidence, but rather kind of put off as not important. This issue comes with alternate cause. Now, I'll get into this a little bit more under the inherency points and solvency points. And we will be arguing inherency, solvency, and significance. So first, under the inherency points, these lie under the harms. And the first inherency point is that there still will be a tuition increase. We have stated evidence from the National Review, which is a very credible news site. In addition, it's from Ian Tuttle from the National Review Institute of Buckley Fellow in Political Journalism. In addition to this, he is quoting the Federal Reserve, or rather, he is interpreting the Federal Reserve's findings. What he states here is Harvard has an endowment of $33 billion. It does not need to compete for government cash. But a private college like, say, Kenyon College in Ohio might be tempted to raise tuition rates to capture federal aid dollars. What this evidence is stating that a lot of smaller colleges, those colleges that don't have very big endowments, not very much money from supporters, it means that those colleges will be still increasing their tuition in order to get this federal aid. And this is something that the affirmative team has not directly refuted, but rather they are saying that we're only reforming loans. However, their harms essentially states that they will be reducing tuition rate hikes. However, these tuition rate hikes will continue because of Pell Grants. So they can eliminate all of the loans currently in the government, but the government has other aid that it gives students, including Pell Grants and other grants. These grants will mean that the tuition will continue to rise. And this is a very large inherency point that the affirmative team has kind of just blown off. Next, we have the second inherency point, that is, there will still be student debt. And indeed, the affirmative team has not disagreed with us. Indeed, there will still be student debt. If students have to get loans from private banks, this means that that debt will still exist. And it will still be even crushing debt, as the affirmative team has constantly used. Because really, what debt is not crushing? If someone has debt on their, and they have to pay that back, and interest rates and high interest rates, also keep in mind that as interest rates continue to increase, and especially in the private sector, and there's no subsidies, that means that those students will have to pay higher interest rates. All of this means that this debt will still be present under the affirmative team's plan. So these are our two issues under inherency. Next, we have the two solvency arguments under the advantages, and these stem from the essentially the harm arguments. The first advantage solvency argument is that the affirmative team will not be solving for increase in tuition. They won't be solving for, or rather stopping an increase in tuition, because we have seen how Pell Grants do the exact same thing, and they are not touching Pell Grants whatsoever. We also see under the second solvency point that debt will still be present. And so when the affirmative team states that students won't suffer from debt, indeed they will continue to suffer from debt and high costs of college, because not only will tuition continue to increase, but these students will have to get their loans from private banks that have higher interest rates. And finally, we come to the disadvantage, which the negative team is putting under significance. This significant disadvantage is that students will not have the benefit of these loans under the government, such as these subsidized loans that oftentimes have lower interest rates and help students in the long run. So for all of these reasons, I hope that I have shown you how the affirmative team's case is indeed not inherent, certainly not solvent, and not significant with the disadvantage.
Judges, today we are discussing the issue of loans. In the affirmative team, we stand the philosophy of we want to eliminate the federal student loan business, and we have proved that our advantages will come forth if our plan is enacted. I'm going to jump right into the stock issues and go down the flow of the argument. So the negative team brought up inherency. Inherency point 1 was essentially our harm one, which was that tuition inflation is caused by the loans. And I would like to read a piece of evidence by Samuel Bryan. We've quoted him previously, and he says, "We find that institutions more exposed to changes in the subsidized federal loan program increase their tuition disproportionately around these policy changes, with a sizable pass-through effect on the tuition of about 65%. I want to focus on that 65%. The negative team said that the Pell Grant raises it about 55%, if I'm quoting them correctly. The loan problem is bigger. This is an effect of 65%. This is a much bigger problem, and that's why we're not getting rid of the Pell Grants. We're getting rid of the loans because they're the biggest problem, and they enable tuition to rise at a greater percentage." Going into point 2, which was essentially our harm 2, which is that students suffer crushing debt. And the negative team keeps making an argument that all debt is crushing. But in our first affirmative speech, we gave a quote about a guy who was suffering crushing debt. What I mean by crushing is he was not able to further his life because of the debt he was in. That is crushing. If you have debt but you're still able to live your life and further your life, then I would not consider that crushing. And that's what we want these students to have. We want them to have, the goal is to have no debt, but if they have a little debt, that's okay. And private sector loans are harder to get, and because they live in the real world, there's risk. The government can just give this endless amount of money and tax the American people, but the private sector lives in the real world. They're only going to give you loans if they think you will be successful and be able to pay back the loans. So students will not suffer as much debt. Going into solvency, their point 1 was talking about our advantage one, which was essentially that tuition will decrease. And I do have evidence that tuition will decrease. This was by Samuel Bryan, which we have quoted a few times now. This is Neil McCluskey, who we also quoted in our first affirmative, and he said, "Critically, students would be able to afford college if aid were phased out. Prices would have to come back to earth as students were required to pay with their own money or funds voluntarily received from others." This is pure logic. Colleges are going to have to lower their tuition if they want students to come, if they want to stay in business, because students are not going to have this endless amount of money from the federal trough to go to and receive more loans. So this is just pure logic. Going into advantage 2, the negative is saying there's still going to be a lot of debt. There's not going to be as much debt because tuitions are going to be lower. Private sector loans are harder to get. So the people that do get loans are going to have some debt, but not unmanageable debt and not crushing debt. And going into significance, which is their disadvantage. And the negative team is making the point that the disadvantage is that if we enact our plan, then these students will not be able to utilize the subsidized federal loans and the grace period. Well, why do we have this? Why do we have subsidized loans? Why do we have the grace period? This is because tuition is so high and debt is so crushing that students cannot pay it back. That is why the affirmative team wants to enact this plan. That's why we have proof that this will work, because the disadvantage is actually the disadvantage will be irrelevant because we won't need subsidized loans. We won't need the grace period because tuition will be at a reasonable price and students will be able to afford to go to college by paying out of pocket or with the private sector. All of this goes to show that we have proved the stock issues, and I urge you to vote upon an affirmative ballot. Thank you.
Needs analysis affirmative. An affirmative case wherein a significant inherent need or harm in the status quo exists that can best be solved by adopting the affirmative team's plan. This plan will solve the need and thus provide significant advantages. This comes from the Policy Debate Glossary, their definition of the case structure that the affirmative team is running. Now, essentially what this is saying is that we need to actually find the source of the harm. The affirmative team needs to be able to eliminate that source of the harm. Now, what the affirmative team is arguing under our inherency is that they are looking at the wrong source, a different cause. So let's talk about that. Inherency. We have 2 points under our inherency which correlate with the 2 harms. Our first point under inherency is that the Pell Grants and the subsidized loans are what's increasing tuition, not just the loans. The affirmative team came back with the argument that said the subsidized loans are a significant portion of it, that they are 65%. Now, our piece of evidence that we read said that not a percentage, but a money amount. It said 55 to 65 cents of every dollar received via Pell Grant or subsidized loan is swallowed up by increased tuition. So what this is saying is that the same amount goes for subsidized loans and Pell Grants, and it's 55 to 65 cents per dollar. So it is clearly a significant amount, and you cannot separate Pell Grants from subsidized loans when talking about this kind of thing. And the affirmative team never brought up any evidence to suggest that subsidized loans increase the tuition rates faster than Pell Grants do. So what we can see is that there is a different source for this harm, and that the affirmative team's case is not going to pull this problem up from the roots. They're still going to leave some things there. Moving on to the second point under inherency, and that lies under their second harm, and that is there's still going to be debt under the system. Essentially, the affirmative team combated this by telling a story about this man who had a lot of debt, and we agree with that. Obviously, we're not trying to refute this story. However, what they never said was they never brought up any evidence that says that taking loans through the private sector will result in less debt. So it doesn't matter if they bring up stories about people who currently have a lot of debt. They are not bringing up anything to suggest that this debt will go away under the private sector. There's no evidence there. And because our problem still results from the same harm, people will still get aid, will still need to get aid, and will still be in debt regardless of where they get it from. Again, they're not pulling the problem up from its roots. Moving on to solvency. Our solvency arguments are that because they're not pulling this problem up from our roots, they cannot get the advantages that they claim, and they cannot fulfill their burden as a needs analysis case. Our argument under advantage 1 is that they said that these students can afford the aid. However, what this piece of evidence said that the government needs to cut their aid so that these tuition rates stop rising. It said cut aid, not cut loans. So what we can see here is that the aid itself, the Pell Grants and the loans, are still driving up the cost, both of them together, not one or the other. The affirmative team's own evidence is supporting our point in this. Moving on to advantage 2. And essentially, again, their argument is that there's not going to be as much debt. But again, we're still at a loss of evidence. There is absolutely no evidence that has been stated yet, and here we are waiting for the affirmative team's very last speech of the round, and they still haven't given us any evidence to suggest that just because someone takes out a loan from the private sector means that they will have less debt. There is no basis for this argument. And finally, we have significance, which is where our disadvantage lies. Now, this is significant simply because we are going to be removing this grace period under the affirmative team's plan. These loans will not have a grace period to repay. Now, I would like to state that the affirmative team shifted their rebuttal and as to how they actually want to argue this disadvantage. What they said is that they are not going to get a grace period because there's a grace period currently because there's higher debt. They stopped arguing that there are banks that provide this grace period because they've only been able to prove to us that there's one bank. So what we're left with again is that there's a significant disadvantage that cannot be solved through the status quo, something that will come up about the affirmative team's plan. And I hope I have been able to show you under inherency, solvency, and significance that you should vote for the negative team and keep the status quo the way that it is.
Easy access to money does the opposite, enabling universities to raise their prices, knowing students can return to the federal trough for more financing, end quote. This is from Brittany Corona in her article, The New Student Loan Deal Ensures That College Costs Will Continue to Rise, published August 19th, 2013. Now, under the status quo, the problem is that we've brought forth is that this unlimited amount of loans causes an inflationary effect on tuitions. It causes the prices of tuitions to go up. The negative team has agreed that loans do cause tuition to go up. Now, let's move on into inherency. And their first argument that is because Pell Grants also affect the rise in tuition, that our plan is not inherent. But I'd like to remind you that our harm of the status quo was not all aid causes tuition to go up. Our harm was that, in particular, this loan problem is causing tuition to go up. That is the harm that we are addressing, that loans cause a rise in tuition, which the negative team agrees with. We want to fix that problem by implementing our mandate, which will phase out federal aid over a 12-year period, federal loans. So our harm is inherent because it's talking about the effect of loans on the status quo. And the negative team even agrees they do have an effect. They have an inflationary effect and they cause a rise in tuition. Now, moving on to their second point was that there will still be debt in the private sector. Well, yes, there will still be debt in the private sector. But it will not be this massive, crushing $28,000, $100,000, $200,000 of debt that students have to come out of the system with today. And for two main reasons. First, private sector loans are more difficult to get. We all know this. They're based on credit scores. They're based on, in this area, are you a good student? Are you going to succeed in college? I'll give you a loan. Yes. They also have higher interest rates, which some can have low interest rates, some can have higher interest rates. For high-risk students, they have a higher interest rate, which means that it deters the students from getting out loans, which means debt will go down. The other reason is that we've presented evidence that tuition will actually decrease under our plan because otherwise students won't be able to pay for it, and colleges will not be getting students. And as a piece of evidence, we've supported this. Tuition will go down, which means it will cost less, which means people will have to have less money in order to pay for the system. Now, let's move on to solvency and how our mandates solve this problem. And under Advantage 1, which is that the system will no longer be affected by the inflationary effect of loans. That's our advantage, and that's what's going to happen. No one can deny that by removing loans, that they'll still have an inflationary effect. When we take out the loans, they will no longer be affecting the system. That's our plan, to remove them. And the advantage that will come about is that tuition will most likely go down. It will, as evidence we've presented, it will go down, and they won't be affecting the system as they are today. We are going to solve for this advantage by removing the loans because that is the specific harm that we have brought forth to be dealt with today. Now, our second advantage is that students entering college will no longer suffer crushing debt, and this is really the flip side of harm too. The same arguments presented here. The private sector, it's more difficult to get loans. As we all know, if you ever applied for a loan from a bank, you have to have good credit scores. This is for your mortgage and all these other loans. This applies to loans to students. You have to have good credit. You have to prove that you're going to do well in school, and that's more difficult to get loans. There will be fewer loans given out, and also the price of tuition will decrease under our plan because colleges will have to bring their prices back to earth once we get all of this aid, this free access to an infinite amount of money out of the system, because they know students will no longer be able to get as much money as they need to pay for tuition. Now, let's look at their disadvantage, which was the opposite of their benefit. And their disadvantage was that, well, now that they're in school, if they get out a loan, then they will not have this grace period. They'll have to pay interest while they're in school. Well, as we presented evidence from a bank that does this benefit still exists in the private sector. You can still get this deferment period is available in the private sector. That was their disadvantage, that it wasn't available, but it is available in the private sector. So this really is not a disadvantage at all. And as my partner said, in her argument was that the reason for that people need this is because of the high cost of tuition. And as we presented again and again throughout this round, tuition will go down as a result of our plan. Higher education is in crisis right now. Students are entering college, they're not graduating, they're getting into high debt. And the government said it's helping by giving them these loans, but it's really not. It's making the problem worse. We need to fix this problem by removing loans from the system. Thank you, and I strongly urge that you cast your ballot for the affirmative team.